I have to say, I find your commitment to the China trade a lot more interesting because we've just had the Bloomberg survey released today, and take a look at this chart, which sees that for the first time this year, we've seen the revised expectations of GDP growth for China. Just a couple of months ago, pretty much every investment house was scrambling to, up their projections of where they think the Chinese economy is going to be, and now we're seeing those expectations being reined back in. Are you convinced that this is going to turn into a self-sustaining recovery?
Oh, look, absolutely. So what's interesting, actually, this is probably the animal spirits in the market. And so, everyone wanted to, when the China reopening took place, the speed and of the actual reopening was so quick. How we saw the COVID went through the economy, and then essentially the government just reopened the economy as it is. So it was very, very quick. So every investment bank wanted to jump on board saying, oh, look, actually, it is going to grow a whole lot faster. But in reality, things will take time. For example, if it's for travel, there's backlog of getting visa. I was talking about how difficult it is. It's a pipeline, and when China reopens, people wanted to get jobs. So people instead of spending first, and they need to go find a job and all of that. So things does take time, but still it is very strong. And compare this to what some of the other economy. Remember Australia, when we had our reopening, we had 2 years start-stop, whereas China, it is absolutely trending the right way. It's just the expectations has ran ahead of itself. And this, in turn, is providing opportunity for investors to really have a second go at this thematic.
Is it also a PBOC put sort of a game, like we have the Fed put here in the U.S. that would backstop any volatility in the markets? If we see any more deterioration in the Chinese economy, can we expect monetary and fiscal authorities to step in?
Yeah, absolutely. And we have seen their commitment early this year, trying to, and then we see early in the year that the credit growth has picked up exponentially. And clearly it is slow somewhat, but government is very, very committed to meeting its target, its growth target. Now, if you remember, we're talking about the Global Investment Bank forecast for the China GDP. Most of them has went ahead of that target. So, so far at the moment, most people still expect them to exceed the target, and the government certainly is not going to disappoint for the next 12 months.
How much will China, though, have to compete against tech-heavy markets like Korea, like Taiwan, given this frenzy over AI and the fact that Chinese tech remains pressured?
Yeah, that's very interesting. Absolutely. Look, China has been developing a lot of its own technology within its tech business. Most of the time has been pressured, and also it's very consumer oriented. In the current environment, it does look like they will go through a more slower trajectory to recover. But hopefully that the regulatory reform and regulatory changes and challenges is now behind us. And, with the valuation they're trading on, it does look like they're very, very attractive.
Where else are you finding value?
Look, we do see the value across the board just because investors are so fixated. A lot of them are fixated on the shorter term volatility, worrying about inflation, interest rate, and lots of uncertainties. We do see opportunities across the commodities. With the China reopening continue to take place, it will be the only economy that has growth, strong growth for the next 12 months compared to everywhere else. So we want to see areas where, they leverage to the China reopening, whether it's some of the consumer stock that sells into China, or whether it's commodities. And selectively, I think from bottom-up perspective, we're seeing a lot of companies being sold out because the earnings near-term weaknesses, we see them as a great buying opportunity. To name one, I think Treasury wine is incredibly valuable at this point. China is about to change some of the tariff it imposed on this business on Australian wine, and share price really not pricing in any of that. And with a very strong balance sheet, with still very strong growth, we think business like that is just not going to remain listed for long if it's cheap.